Good morning, everyone. So today we are going to discuss about the term that is financial reporting. We are going to discuss about what is the concept of the financial reporting, that what is financial reporting, what is the need of financial reporting, in what way we used to present or report the finances of the company, and what is the essentials of the financial reporting. So first we will be discussing about the financial reporting, that what is financial reporting. So basically the financial reporting involves the disclosure of financial information to the various stakeholders about the financial performance and financial position of the organization over a specified period of time. These stakeholders include investors, creditors, public, debt provider, government, and government agencies. So basically, what is this financial reporting? That the report used to disseminate the information regarding the company's or the organization's performance, the financial performance, and the financial position to the interested parties. Now, what are those interested parties? So, for any company or organization, there are interested parties like investors, creditors, public, debt providers, government, and government agencies in a various terms or in a various roles. In the objective, we will discuss how it is important. Now, come to the components, that in what way we used to report the finances of the company. So basically there is a fixed format. In that format only we used to report our finances. So first is here the financial statement. As we know, the financial statement is nothing but the reflection of all the finances in the form of balance sheet, profit and loss account, cash flow statement, and statement of changes in stockholders' equity. Basically, this balance sheet comprises of assets and the liabilities. What are the assets of the company and what are the liabilities of the company, we have to show. Profit and loss account basically shows what are the expenses and what are the incomes of the company, and cash flow statement basically shows what are the flows of the cash in the organization in terms of inflow, in terms of outflow. What are the total inflows of the cash is there of the organization, and what are the total outflow of the cash is there in the organization. Now, after the financial statement, we have to prepare a notes to the financial statement, where you have to show or give detail that how these uh, uh, expenses or how these transactions has happened. Then quarterly and annual reports. Then prospectus, the quarterly and annual report in case of the listed company, and prospectus in case of companies going for a IPOs, and management discussion and analysis in case of public companies. So basically, if we are going to report our finances, if we are doing a financial reporting, these components should be there, which will give the information, which will disseminate the information regarding the financial performance or financial position of a company for a specified period of time. Now, why the financial reporting is important? What are the needs of financial reporting? What is the objective behind financial reporting? So, very first is here for taxes. As we know that tax is every time levied on our income. What the income we are generating, what the income we are earning, on that only we used to give the tax. So if any company is there, if they are not going to show that what is their financial position, what is their financial performance, the government will not be able to impose the tax on that company. So this financial reporting plays a very important role for the government. For that, here the interested party is government. For the government, they used to make a financial reporting so that they can charge what the appropriate tax is there. Now, second is for investors and the shareholders. We know that what the funds we need every time, that most of the fund are coming from the issue of shares. So investors should know. For the investors, we have to just show that what is our financial position. By checking our financial performance only, they used to invest in our company, or by checking our future growth or prospect only, they are going to invest in our company. So this financial reporting will help them to make decision whether to invest in our company or not. Next is for internal decision making. As financial reporting comprises of everything regarding the financial position of a company. So by just making that financial reporting, we used to, or we will be able to make decision that where we are lagging and where we are doing good. So that will be very helpful for the management of the company to take a decision. If no any record will be there regarding the finances, that will not be possible for the management to take any internal decision regarding the growth of the company. So it is very important. The financial reporting in this aspect is also very important. Next is the for improved internal vision. What is your vision? Accordingly, you are going or you are in that path or not. So by checking your financial position or the performance, you can improve. If it needed to improve, you can improve your internal vision. Next is for ensuring profitability. This financial reporting also depicts the profits of the company. So whether whatever we were decided, whatever we were set the standard, according to that we are getting the profit or not. So this financial reporting will help to just take the information regarding the profitability of the company. We have a different methods, we have a different ways to shows the profits. Next is for raising capital. It is also from the management point of view, it is very necessary that what is our financial position. Accordingly, whether for the future prospect, future growth, we need capital, or whatever the profit we have earned, from that profit only we are going to use the fund, and accordingly the growth of the company. So this raising of capital also depends on the financial reporting. Next is for managing financial ratios. The financial ratios, as we have learned about the various financial ratios like working capital ratio, current asset ratio, debt equity ratio, profitability ratio, gross profit ratio. So to manage all the financial ratios, we want the financial reporting. This financial ratios are depicted in different bars or in a pie chart, so that we can, whatever our specific point, we can point on that. Whether we want to only know about the current position of a company, means the current asset of the company, whether it is appropriate to pay the current liabilities or not. So from this financial ratio only we will be able to see. We need not to go through all the balance sheet of the company. Only by checking the current asset ratio we can check the position of the current asset and the current liabilities. Next is for predictive strategies. Whatever the strategies we are going to make or to predict some strategies, we need some report. This report will help the company to make some strategies for future. If we are doing good, if our financial reporting is good, so in that case we can just predict the strategies regarding the future growth, that we can grow in other product line and all. But if our financial position is not good, so what should be the future strategies for the same? So everything is depend upon the financial reporting, what exactly the information we have got from our financial statement. Next is for lowering the risk and for ensuring the transparency. Here transparency means that how we will get to know that whatever the profits you are making, is it correct or not? Whatever the income you are incurring, is it correct or not? So for that we need to just depict on the paper, so that will be checked by other interested parties that this company is doing good, actually this company is doing good or not. So if any proof or the documents will be there, it will be showing their transparency. So these are the basic or very important features of the financial reporting. For financial reporting, the company have to do the financial statements. They have to just collect the information, all the information regarding the finances. Now, what are the essential use in case of the financial reporting? Means how we will be able to check whether financial reporting is important or not. So here 5 questions are there. We will be able to get, yes, this financial reporting is important. So first is purchasing this stock a good idea? This is the question from the point of view of investors. So by checking their financial reports only, by checking their financial performance only, they will be able to judge, they will be able to decide whether the purchasing of the stock of this particular company is a good idea or not, whether they are going to prospect in a future or not. Second is, are we profitable? Will we be in a future? Whether we are profitable in this current situation or not, how we will get to know? So by our financial reporting only, by our financial documents only, we will get to know that whether we are profitable or not. The profit and loss account specifically is for showing the profits or the losses of the company. So by just seeing that profit and loss account, we will be able to know that whether we are profitable or not. And if we are profitable in this current year, we will be able to gain that profit again in future or not. So this financial reporting depicts or shows these informations. Next is, how much cash runway do we currently possess? As I told that in this financial reporting, the cash flow statements is it's also a component. So by checking that cash flow statement only, we will be able to know that whether we are going with the correct cash flows or not, or in future we need some cash, or we have a extra cash to use. So by checking that cash flow only, we will be able to know, as the cash flow statement basically for the inflow of the cash and outflow of the cash. Next is, do we have the capital to invest in new lines of business? So by checking the financial reporting, as we know that balance sheet shows the assets and the liabilities of the company. So whether we have the appropriate capital to invest in future or not. If we want to grow our business by adding some new product line. So for that, we need some capital to invest. So by checking that balance sheet, we will be able to know that whether we have a appropriate capital there to invest in a new product line is there or not. Next is, are my vendor relationships as healthy as they should be? So by checking your financial reporting only, you will be able to see everything. You will be able to make decision regarding everything. Basically, this financial reporting, the companies make these financial reportings for the interested parties. These interested parties are government, the investors, the suppliers, the customers, or the various financial institutions, the banks, so that in what form they need information, this financial reporting should be able to give the information to that interested parties. Basically, the investors know about the future prospect. So in this financial reporting only, they will get the information for their benefit. If government is there, so government only see your statements to charge the tax. So this financial reporting itself will give the government the information according to their interest, so that they can levy the appropriate tax on your income. And if any bank or financial institutions are there, so you, every time if you are running a business, you will have in the need of capital every time. So your capital could be come from the investors, it could be come from the bank or the financial institutions. So bank are not going to provide you the loan if they will not be able to see that what is your financial position. So by checking your financial position in this financial reporting only, everything will be there. So by checking your financial reporting, they will be able to see whether you will you are able to pay back that loan or not. So these are the basic concept of financial reporting. With this, I am ending the session. Thank you.